let's look at what we're really learning. So this is a presentation that to make it very simple for a client to understand how the banking process works. So let's look at it. One step forward, two step back. We got $100,000 annual income for this family. They got $150,000 in retirement account. Let's say they earn 10% in their account, but they're giving away 34.5% of interest. 34.5% of interest goes out the back door versus what comes in the front door, which is the 10% on the retirement account. Well, that's a minus 19% or minus $19,000 versus what's going out the back door. Most advisors work on the left side of that column, not the right side of the column. So if we can reduce the 34.5 instead of trying to increase the 10%, we're doing the client a tremendous service. Well, we're going to buy a truck, and we've got two ways of buying this truck. It's going to cost us $20 grand. We're going to finance it for 4 years at 5%. So the payment on that is going to be $460 a month. We've got two ways of buying it. We've got your family bank and we've got traditional bank. On the family bank, we've capitalized our bank, and we've got $30,000 in our bank. We're going to pull out $20,000 to go buy our truck. And if you know that on infinite banking, you've got to be an honest banker. So whatever the bank would charge you, you want to charge yourself the same interest. So we're going to make the payments back. 12 payments times $460 a month is $55.20. That $55.20 now goes back in our family bank, or to the left column. Had I made that payment to the bank on the right side, I would have had none of that money after year one, zero, because the balance would have been zero in the bank. Well, year two, I'm going to buy a boat. Now, you probably couldn't get this boat for 11 grand, but we got this boat. Then we're going to buy the boat for $11,000. We're going to finance for 3 years at 10%. So the payment on that's $354. Well, I'm going to pay that full $11,000 out of your family bank, move it back over here, and buy our boat, and then we're going to pay the $354 back to where? Your family bank. 12 times $354 is $4,248. And which bank would you rather make payments to? Well, if you put it into that bank to the right, wouldn't have anything. But this is where the velocity of money kicks in, because there's our car payment of $55.20 plus our boat payment of $42.48. That's $9,768 goes back in for our boat and truck, goes back into our family bank. So that brings it up to $14,288. Now we put that to the bank over here, we'd have had zero of that money in year two. Year three, we want to buy a home entertainment center. Based upon this home entertainment center, it's going to cost us $5 grand. It's a Bose system with a 72 flat screen. So we're going to buy it for 2 years at 10%. So our payment on that is $230. And so here's our payments, 12 times 230, which is $27.60 for the year. And the velocity of money kicks in again. Here's our truck, here's our boat, and here's our entertainment center. So the $55.20, the $42.48, $27.60, which is $12,528, goes back into our family bank. So it brings us up to $21,816. Well, year four comes along, but at the balance of year three, we got still zero in the traditional bank. So we go to year four, and the only thing that we do, the velocity of money kicks in. We pay for our truck, our boat, and our home entertainment center is $12,528. That money goes back into our family bank over here. At the end of year four, nothing would have went into the bank over here. Well, what just happened? Well, we used the same $20,000 to finance $36,000 worth of items. There's our $20,000 truck, our $11,000 boat, a $5,000 home entertainment center. We started with $30,000 and ended up with $34,000. That's how the velocity of money kicked in for ourselves. And most importantly, we kept all the money in the family bank, and we would have had nothing in the bank over here to the right. So once a client kind of gets an understanding of how the bank works, it makes it very easy for them to understand it, and they create your family bank. So which bank would they rather work at? Well, I think they'd rather work at your family bank once they understand how it works.